Hey everyone, so I'm sure you've seen all the headlines, about the crypto crash, and well, I'm betting you're probably here to figure out what in the world is going on.
Yeah.
So today we're doing a deep dive looking at this article from 99bitcoins.com. It's called Why is Crypto Tanking? Dust Settles Over Crypto Sell-Off and Mass Crypto Liquidations. It was just published like 2 days ago. On
Yeah.
February 25th, 2025, we're going to unpack the current downturn, look at the things that are kind of driving it, and maybe uncover some opportunities while it's so chaotic. If you're feeling a little unsure about your own crypto investments, well, you're definitely in the right place for this. I've got an expert with me who can help us break it all down. Now, this article, it starts off painting a pretty serious picture of the market.
It really does. Bitcoin is down 7%. Ethereum's down 11%. And that's on top of like a 33% decline we've already seen. And meme coins, forget it, down almost 40%.
Yikes, that's rough. I could definitely see why people are getting nervous. I have to admit, I felt my heart skip a beat when I saw those numbers too. But the article, it doesn't seem to be panicking. So what are they saying about all this?
Well, it's interesting. They're suggesting this could actually be a good time to buy. They see it as more of a dip, a temporary drop, not a total collapse or anything.
Okay, so not the end of crypto as we know it then. Phew. But what's causing this dip? Is it just, people getting nervous, or is there something bigger happening?
There are definitely a few things going on. The article talks about how Bitcoin miners are struggling.
I mean, the people with all those computers verifying transactions.
Right, the ones keeping the whole blockchain running.
At the backbone of it all.
Exactly. But they're having some problems. The article mentions trade tensions, tariffs on imports, shipping delays, especially with those mining computer parts coming from China. Apparently, U.S. Customs is really scrutinizing those shipments. It's causing major slowdowns.
So it's like a supply chain nightmare for these miners.
Exactly. And it's hurting their profits.
Mhm.
Higher costs, delays, all while the price of Bitcoin's going down.
That's a tough situation. I imagine that affects the entire market, right?
It does. Some miners have had to sell some of their Bitcoin to cover their expenses. And when more people are selling than buying, well, the price drops.
Basic economics. Makes
Yeah.
sense. But what about Ethereum? I thought it was doing well with all this DeFi and NFT stuff.
Yeah, well, this is where it gets a little strange. Ethereum's prices dropped too, even though Bybit, that crypto exchange, just bought a ton of ETH, like $700 million worth.
Wait, they bought more Ethereum after a dip. Why would they do that?
It seems weird, right? Especially because this was right after they got hacked.
Hold on, hacked? So they bought more Ethereum after losing money to hackers?
It seems that way. It's like they think this is a good buying opportunity. Maybe they really believe in Ethereum's future, even after the security breach.
Okay, so even with that huge purchase, the price is still down. There must be more to it then. What else does the article say?
Well, they mentioned Solana too. It's at its lowest price since October. They're saying it's because of a couple of things. The meme coin hype is over, which inflated Solana's price, and a bunch of Solana tokens just became available to trade, so there's a lot more supply now.
Ah, right, token unlocks. When tokens that were locked up become available for trading.
Yeah, exactly. When the supply suddenly goes up, the price usually drops.
Ugh.
It's like when a store has too much of a product, they have to lower the price to sell it all.
Right, that makes sense. So we've got miners struggling, a big Ethereum purchase after a hack, and Solana's token unlock. The market seems pretty unpredictable right now, wouldn't you say?
Absolutely. But remember, the crypto market is known for being volatile. These ups and downs are kind of normal.
True, it's definitely a roller coaster. But this is what I find really interesting. The article talks about how regular investors like us, they call us retail investors,
Mhm.
are reacting very differently than these big institutions.
Yeah, it's a big difference. A lot of individual investors are selling because they're scared. They see the headlines, the price is dropping, and they panic.
I get it.
But institutions, they seem to be doing the opposite.
Yeah, I've seen headlines about Michael Saylor and Goldman Sachs. They're making big moves with crypto. It's like they're not worried about this dip at all.
Not at all. Let's start with Michael Saylor. He's the CEO of MicroStrategy, a company that's been buying a lot of Bitcoin. They just bought another 20,356 Bitcoins for almost $2 billion.
Wow, $2 billion. That's a bold move, especially now. He must see this as a buying opportunity then.
Definitely. He's always saying he believes in Bitcoin's long-term potential. He sees these dips as a chance to get more Bitcoin at a lower price.
It takes a lot of confidence and a lot of money, obviously. But he's not alone, right? What about Goldman Sachs?
They've been quietly buying Bitcoin and Ethereum ETFs.
ETFs. Could you explain what those are for those of us who aren't sure? And why is Goldman Sachs buying them such a big deal?
Sure, ETFs are like baskets of assets you can buy and sell on the stock market. In this case, these ETFs track the performance of Bitcoin and Ethereum. They're a way for big institutions to invest in crypto in a more regulated way. So when Goldman Sachs gets involved with crypto ETFs, it makes the whole market seem more legitimate.
So it's not just for tech people anymore. Wall Street is taking notice. What about Coinbase? They're big in the crypto world, right?
Huge. They're one of the biggest crypto exchanges. And they just reported $420 billion in trading volume for the first quarter of this year.
$420 billion, that's more than some banks.
Exactly. It shows how big the crypto market is. Even with all the ups and downs, there's a lot of activity. It means more and more people are using crypto.
So while some people are freaking out and selling, these big institutions are seeing opportunity. It's like they're looking at a different market altogether.
That's a good point. It makes you wonder, who's right? Do these institutions know something we don't, or are they just able to handle more risk because they have so much money?
That's the big question. Fear versus opportunity. And speaking of fear, we can't forget about that Bybit hack. That adds another layer of worry to all of this.
It does. It raises the question of how to keep your crypto safe.
Yeah, if a big exchange like Bybit can get hacked, it makes you wonder about all the other platforms out there.
I understand that concern, and that's why the article suggests looking into decentralized exchanges, or DXs. They might be a safer option.
DXs, I've heard of them, but I'm not really sure what they are or how they work.
Yeah, maybe we should explain DXs a bit more. They're important, especially when it comes to keeping your crypto safe.
Good idea. Let's break down what DXs are, how they're different from regular exchanges, and why they might be good for people worried about security. I'm sure a lot of our listeners want to know more about this.
Definitely. It's a fascinating topic.
Okay, so let's get into these DXs. You said they might be safer than those centralized exchanges. Can you explain why that is?
It all comes down to who's holding your crypto. With a centralized exchange, like that Bybit one we talked about, they're the ones holding onto your assets, like a bank.
So you're trusting them to keep everything safe.
Exactly. And that's the problem. Centralized exchanges are big targets for hackers. They've got tons of crypto all in one place.
It's like putting all your eggs in one basket. Right. And we saw what happened with Bybit. Even big exchanges can get hacked.
Exactly. But with a DX, it's completely different. You hold your own private keys.
Private keys, those are like passwords for your crypto, right?
Yeah. That's a good way to think about it. And if you control your private keys, there's no single point of failure.
So you don't have to worry about someone else getting hacked. Or, even worse, running off with your money.
Right. DEXs are built on blockchain technology, which is super secure. All your transactions are recorded on a public ledger, so it's almost impossible to mess with them.
That sounds pretty safe. But I'm guessing there are some downsides to DXs too.
Well, one thing is that they can be a bit more complicated to use, especially compared to those fancy centralized exchanges.
I can imagine. Taking care of your own private keys sounds like a lot of responsibility.
It is. You have to be really careful with them, because if you lose them, you lose access to your crypto. There's no customer service to call and get a new password.
Okay, so security is really important. What about trading? How does that work on a DKX?
DXs usually have less trading going on than centralized exchanges, so you might not always get the best price.
You mean you might pay more in fees?
Maybe. Or you might get a slightly worse exchange rate.
So you're basically trading a bit of price for more security and control.
Pretty much. It depends on what's more important to you.
That makes sense. You have to decide what's worth it for you.
Exactly. It's all about your own needs and how much risk you're comfortable with.
Okay, so let's say I want to try a DEX. Where do I even start? How do I pick the right one?
That's a good question. There are a lot of different DEX platforms out there. They all have pros and cons.
I bet it's overwhelming for someone new. What are some things to look for when choosing a DX?
First and foremost, security. You want a DX that's known for being safe and reliable. Look for one that's been audited by security experts.
Right, security is the most important thing.
Definitely. Also, think about what cryptocurrencies they support. Some DXs only work with certain coins or tokens. Make sure the one you choose has the ones you want to trade.
So you need to know what you want to invest in. Got it. What about fees?
Yeah, fees are important too. The EXs usually charge fees for trading, so compare the fees across different platforms to find the best deal.
Right, those fees can add up. Anything else to consider?
Ease of use is important too, especially if you're new to DXs. Look for a platform that's easy to understand and use, with good tutorials and helpful customer support.
Yeah, it's frustrating when you can't figure out how to use a platform.
Absolutely. Another thing to consider is the community around the DX. Do some research and see what people are saying about it. Look for a platform with a good reputation and an active development team.
It's like checking reviews before you book a hotel. You want to make sure it's a good place.
Exactly. It's important to do your research.
Okay, so we've talked about why the market is down, how institutions are reacting differently than regular investors, and we took a deep dive into these DXs. What does all this mean for someone trying to figure out the crypto world?
I think the main takeaway is that things are changing quickly in crypto.
It seems like it.
We're seeing institutional investors becoming more important, and new solutions like DXs are gaining popularity.
It's exciting, but also kind of scary, right?
It can be. But knowledge is power. The more you understand about crypto, the better decisions you can make.
That's true. So as we move to the last part of our deep dive, let's talk about the future. What are some things that might happen in the crypto market, and what opportunities are there for our listeners?
Let's explore that, because while things are a bit crazy right now, the future of crypto is still really exciting.
All right, so we've covered a lot of ground, this crypto dip, what's causing it, even how to keep your crypto safe. But I think the big question everyone has is, what happens next? What's the future of crypto?
That is the million-dollar question, isn't it? And I think this dip, it kind of shows us what might be coming. We're seeing this push and pull between fear and opportunity.
Like that tug of war you mentioned before.
Right. On one side, we've got regular investors, a lot like our listeners, right? They see the news, they see the prices dropping, and they get nervous. It's understandable.
Yeah, totally. It's their money at stake.
Exactly. It's natural to want to protect what you've got when things get shaky.
Absolutely.
But then you've got these big institutions like Michael Saylor, Goldman Sachs. They see this dip as a chance to buy more, double down on their bets. They're thinking long term, they're betting on crypto's value even when things look bad.
It's such a different approach. It really makes you wonder, who's got the right idea?
Doesn't it? It raises some big questions about the future of crypto, Will it be controlled by these institutions, or will regular investors still be able to make it?
Okay, so let's imagine, what if institutions do take over? What does that mean for the average person, for our listeners?
Well, it could make things more stable. Institutions, they have a lot of money, so they don't panic sell as easily. They're more likely to hold on for the long haul.
So less of those crazy price swings.
Yeah.
That could be good for some people.
It could, but there's a downside too. If institutions own most of the crypto out there, they could control the market, Their decisions could have a huge impact on prices. And it could be harder for smaller investors to keep up.
Yeah, it's like anything, really. When a few people have all the power, it's harder for everyone else.
Exactly. But that doesn't mean regular investors are out of luck. It just means they need to be smarter, do their research, be strategic, and choose their investments carefully.
So don't just follow the hype, think for yourself. We hear that a lot. But you mentioned opportunities, too. Where are the opportunities for regular investors in all of this?
Well, these dips, they can be great buying opportunities. If you've done your research and you think a certain crypto has a future, then a dip like this is a chance to get more of it at a lower price.
Buy low, sell high, the classic advice.
Exactly. Of course, there's always risk. No one knows for sure if the price will go back up. But if you can handle the ups and downs and you believe in what you're investing in, then these dips can be a chance to grow your holdings.
It's all about balancing the risk and reward. Definitely not for everyone. But are there other opportunities besides just buying and selling?
Oh, absolutely. Remember those decentralized exchanges we talked about? That's just one example of how crypto is innovating. There are always new platforms, new technologies, new things being built.
So it's about staying curious, keeping up with what's new, being open to new ideas.
Exactly. The crypto world is always changing. What's cool today might be old news tomorrow. So the more you learn and explore, the better you'll be at finding those opportunities.
So the key takeaway here is the crypto market. It's dynamic, it's changing all the time. There are definitely challenges, but there are also huge opportunities.
You got it. It's not for passive people, It's for people who are active, who want to learn, who adapt, who are okay with uncertainty.
It's a journey, not a destination. And speaking of journeys, we've reached the end of our deep dive into this crypto crash.
We covered a lot, from what's causing this dip to what the future might hold.
We talked about decentralized exchanges and how regular investors and big institutions are reacting differently to all of this.
And hopefully we've given you, our listeners, the information you need to navigate this crazy world.
But before we go, I want to leave you with one last thought. We talk about how institutions see this dip as a chance to buy more. They're betting on the future of crypto. So my question to you is, what's your bet? Do you agree with them? Do you think this is just a bump in the road on the way to crypto going mainstream? Or do you think something bigger is happening, a fundamental shift? Whatever you think, we encourage you to keep learning, keep exploring, keep engaging with this fascinating world of crypto. Thanks for joining us on this deep dive. Until next time, happy investing.